blockchain, cryptocurrencies, digital assets, what's noise, what's news. Joining me today is Harrison Richard with Halcyon Digital Assets. And we're going to talk a little bit more about Halcyon, but we need to start this whole conversation with a story about how Harrison and I ended up getting together and why we're even sitting here having this conversation. So I've known Harrison's dad for going on about 15, 16 years now, maybe even longer than that. And we served on a board together at St. Paul's School, where Harrison graduated from. Harrison went off to Duke and got his bachelor's degree, and then went to work in private, what would you say, private banking, investment banking?
Investment banking, hedge fund space, a little bit of this, a little bit of that for, I don't know, 6 years.
There you go. So every time Todd, Harrison's dad, and I would go to lunch, he was bragging. Like, you would not believe Harrison's doing this, and Harrison's doing that, and Harrison's on top of this. I mean, it was all the time. And just kind of followed his career from afar. And about a year ago, we were just talking about this, it's been about 1 year ago, Angel and I were out riding bikes here in Covington, and Harrison was out for a walk with his mom, and I just asked him, I was like, what are you up to? And he said, well, I'm home. And if you guys know how this world works, they bring young guys in and use them up as long as they'll stay.
Yeah.
And so, Harrison, what, you work 90, 95 hours a week?
That's a good week.
And working in this space and kind of seeing how it's going on. And I was asking him what he was up to, and he said, well, I'm looking at blockchain and digital assets in the cryptocurrency world. And I'm just going to tell you, I don't know how it is for you guys, but for me, this is something that is really intriguing, because as I look at the world right now, and you and I talked a lot about this, this feels a lot like the late 90s in that there's a wind of change. Something is changing. And you can't quite put your finger on what it is, but you know that something's there. But the other thing that was really obvious to me was there's a lot of noise around this. And this will make sense to those of you who were there, but you remember Pets.com, which was the last company to really get a whole lot of IPO funding before it completely crashed. And so, you're a little bit wary. You see the change coming, you see things, but at the same time, we know, those who've been in the situation know what a bubble looks like, right, and know how I want to be cautious around that. So this began a series of about, I want to say 4 or 5 months of breakfasts of Harrison and I sitting down and just having conversations like, help me understand this. Help me understand what's going on in this world. Help me understand what's happening and where the opportunity is and where the noise is. And so what we're going to do is just a conversation today to talk a little bit more about, we're going to kind of invite you in to that 4 to 5 months of conversation that we had. And
Crash course.
Yeah. Unpack it a little bit. Talk about some of the ways that I was able to connect it to these things that I saw going on in that space. But why don't we start with this, Harrison? I think this is maybe the best place to start. So what is crypto? What is digital assets? What is this entire space about? Give a high level view.
Sure. First, Eric, thanks for putting this together. I'm excited to have this conversation, and I'm thankful that your first question is, hey, do I go buy Bitcoin right now? If that is part of the noise that we're trying to circumvent with this conversation.
Absolutely.
So what's the news here? The news is, what is blockchain, the question you asked. What is this broader, bigger conversation that we need to have with people? And blockchain in the digital asset space can be summarized with the 5 key tenets of, you have decentralization, cryptography, immutability, tokenization, and programmability. These 5 things in concert with each other have created a new system of information and exchange that is really novel and quite unlike anything we've had to date. And so, okay, great, that's 5 technical words. What does it mean together? Well, it means in a sense that we've kind of divorced the state authority, or divorced maybe Apple or Google, these titans of industry or titans of nations, to say, hey, what is money, what is value, and can the little guy participate on the same fair level terms as the big guys, right? So philosophically, bring it back to what I used to do in my past career, was working for some big giant institutions. And I don't want to get too cliche in here, it was the rich getting richer, but it was quite true to say that the opportunities that these large players were invited to participate in were totally different from the little guy logging on to his online broker and getting front run by the market makers on every single purchase.
Yeah.
And so what really excites me about the opportunity here is that everyone gets to play on the same level, same fair, same rule set, right? And so the blockchain can unite all of these players together in a new way that I think is only beginning to be understood by the market.
Yeah.
Right,
Yeah.
and so to go further from there, is Bitcoin on the blockchain? Are these other cryptocurrencies people might have heard of? Are they blockchain technology? Yes, but let's zoom out. Let's make sure we're not conflating pets.com and the internet.
Sure.
Right?
No, absolutely.
And so I hope for the rest of this conversation we can focus on what's the noise, what's the news.
Yeah. So one of the things I think that we had a lot of conversation around this is there's a frustration out there, right? And I mean, especially my kids are experiencing it. Some of maybe even your friends and things like that. There's a generational frustration that there's been an entire industry built that has felt, whether real or not, but it has felt profit over people. Mm-hmm. Let's put money profit ourselves versus the people. Yep. And there are definitely businesses and industries out there that are saying no, profit and people need to be aligned. But I think one of the things that I started to see pretty early on with the blockchain technology, and we're gonna, again, for those of you who are listening, we're not saying, hey, Dogecoin or Bitcoin or Ethereum or anything specific. We'll get to that in a little bit. We're just having a conversation from a 50,000 foot level of blockchain itself. Talk a little bit about this idea of profit and people being aligned versus this entire industry that really has been raised up to, hey, as much money as I can put in my pocket is great, and how the people are affected, we'll see.
That's a good question. So let me launch off of what I said before about everyone in this ecosystem playing by the same rules, right? And so when we think about the intermediaries we have in life, in particular finance, there's all of these layers of middlemen who sit between what a consumer wants, what they want to buy, what they want to invest in, and ultimately who's giving it to them, right? So imagine how many different layers your regular retail investor has to go through to purchase something like Apple stock, right? Do they even own the Apple stock? Well, no, they kind of have a IOU with their broker, and then there's this Byzantine system that at the end of the day is like, okay, we credit that account with one Apple stock, but at that point, what price did you execute for? It was probably not good. There's all sorts of businesses in the high frequency world of just shaving off pennies to make sure you don't get the best possible price. And so when this theme of intermediaries sitting between people and profit is something that the ugly head of that arises everywhere. And whether it's with your local bank that's giving you very little money in your savings account compared to what they write mortgages for, whether it's the credit card companies, the merchant fees people have to pay for, which all gets pushed to the consumer in one way or the other. There's countless examples of just the system not being appropriately greased as well as it could be today.
Sure.
And I think the disintermediation that blockchain technology provides has far-reaching consequences for what we could see in the systems of the future, where commerce and investing from the little guy to the biggest guy is much more efficient and much more fair for all parties involved. Is that?
Yeah, no, that's definitely one of the things there's a couple of themes I want to pick up on, and then I want to dive into this as we talk about this a little bit more, because I think what you and I know is that probably the best example is thinking about these big banks and just trying to compare how does blockchain fit versus what we see inside the banks. And then you could extrapolate that out to brokerage firms and to other things like that. But there's two things I think that get to be really important. First is this: we're still very early on in the technology. Right? And so we're going to talk about some things today that if you were a person who experienced the late 90s, the early 2000s, one of the words we've used with a lot of people is we're sitting in a world right now looking at AOL, trying to uncover where Netflix is going to arise from. Because in the late 90s, we didn't know what Netflix was going to be, and Netflix completely changed as the internet really began to evolve and become things. So talk a little bit more to that, just kind of from the age of the process and where we are in the adaptation of what we're seeing in the overall industry right now.
That's a great question. And so let me I'm going to answer this in a little bit of a roundabout way. So let's talk about AOL and how we've progressed since AOL to all the way to today. Or even before that, one of the examples I like to bring up is the acceleration of technology and technological adoption, right? So the first credit card, charge card, diner, restaurant card, whatever it was, that was late 1950s, early 60s, and now, middle schoolers have debit cards these days, right? And so, the first iPhone came out in June-ish 2007.
It's crazy.
And then how long did it take before every middle schooler now has an iPhone too, right?
Yeah.
Or so it seems. I don't know if you can even go buy a phone that doesn't have a full touch screen at this point.
Right.
And so we see countless examples in our daily lives that the adoption of new technologies seems to be going at an ever faster and faster pace, right? And that creates massive opportunities to create value. Well, here's an example. What is Instagram without the iPhone, right? So there's, in the same vein, blockchain is going to unlock so much value from new protocols that we haven't even conceived really, that are going to be as impactful to society as Instagram might be for the iPhone. And so, what is that going to look like? I have some hypotheses, but it's very difficult to sit in 2000. In the year 2000 and talk about Netflix and about what it means today, right? 20 years later. So what do those look like? My guess it's going to be the abstraction of financial activities away from the institutions that control them today, like the big banks, and basically putting it into consumers' pockets. Right? And so whoever comes up with those killer apps, some of which the prototype and tooling for that exists today, but whoever makes it mainstream enough to where it's a household name like Instagram and iPhone, wins the game, right? And so the interesting thing about this is that we're seeing more and more that the winners of this game is probably not going to be a Google.com or an Apple. It's some new protocol that's decentralized, has huge amounts of open source software as its backbone and its infrastructure, and creates a permissionless system for everyday users like us to benefit. And I think that's a world I want to live in because it's much more autonomous for the users, and I'm self-sovereign, and we don't have to worry about, the stuff we're seeing all the time now about the state getting too involved with inflating our money away, getting too involved with banking regulations, keeping the little guy from succeeding, right? While the banks always succeed.
Absolutely.
So I hope does that answer your question?
No, that definitely does. Which leads then into kind of point two, especially for those of you who are watching this, the one thing that became this unlocked this in a big way when we were having conversations for me. We live in the United States.
Yes.
It's very easy to be US-centric and think of this only as to how this affects me in the United States.
Right.
The opportunity that sits inside a blockchain really, you have to think globally. You have to have a bigger picture mindset of what about people who live in places that don't have stable financial systems?
Right.
What about people who live in places that don't have the same types of opportunities that we even have today? So talk about this from a global perspective.
Absolutely.
Because that is also we live in a global world now. The internet opened that up. I think that blockchain completely changes that dynamic.
And thank you for challenging me on that because I think it's incumbent upon all investors. You have to understand that more than ever, day by day, this is a global world, right? And as you pointed out, the internet has opened the floodgates for capital. And at the same time, we see all of these developing countries try to put in capital controls because they know their money wants to exfiltrate, their capital wants to exfiltrate to the best money systems around, right? And we're seeing evidence. I hate to bring up specific examples in the digital asset space, but we're seeing examples all the time of capital using Bitcoin or other cryptocurrencies as capital exfiltration. And the reason they do that is because they want to get their money outside of a bad system and put it into a better system. History is littered with countless examples of governments inflating away their money, whether it's Argentina, whether it's Turkey, whether it's Zimbabwe, right? And so history doesn't always repeat itself, but it usually rhymes,
It does,
right?
yep.
And so I would take the other side of the bet against someone saying, the US dollar is going to maintain its global reserve currency status forever, right? I don't know, I'm not going to pick a date, but I think it's unwise to suggest that global powers aren't always shifting and that no one knows what tomorrow is going to look like. And so when you talk about the global opportunity for blockchain, we get to build systems that are, when rules for everyone. Well, usually in our head, we think of everyone in our local community, maybe our country, maybe our state, but you're right. This is people that don't speak our language, don't look like us, and have problems that they face every day with, I need to wake up and I need to go work and I need to make sure that my money can buy as much as it can today as it tomorrow, right? And that's a challenge faced by a lot of people, and I thank you for bringing that up because that's where the opportunity is.
And it's the reason that I think this is bigger than we see. But at the same time, I think you would agree there's a whole lot of noise that's clouding this whole situation right now.
Yes.
Right? I mean, there's a whole lot of coins and a whole lot of
thousands
of coins, right? NFTs and all this other stuff that's just, and so everybody's like, oh my goodness, what am I supposed to do with this? Where are we supposed to go? What I'd like to do is let's go back to the idea of the bank. Let's come back and let's talk a little bit about banks. Because the one thing I think you and I where we really connected was on this idea that you can't take a new system and try and cram it into the old system and still have it work. But what we're seeing right now is a lot of the old powers going, oh no, this could be completely disruptive. So if we don't find a way to cram this into our old system, we're going to be in trouble.
Right.
So I want to go through just a few things that we see. And again, I'm going to use this as a bank. We're going to talk about banks. One of the things I know about banks is that there's not a whole lot of transparency that goes on. And there's not a whole lot of accountability.
Right.
But blockchain is verifiable, trustless, and transparent. So what are you seeing going on right now on some of maybe even the institutions or things like that are popping up that are trying to get into this space where you're seeing them trying to take this blockchain technology, but they're not providing the transparency, they're not providing the accountability.
Okay.
Where are you seeing that right now?
I have to do this without naming names.
Yeah, you're going to be very careful. We don't need a lawsuit.
Yeah, exactly. So, but how about this? I'm sure a lot of the audience watched the Super Bowl, right? Can you recall how much ad space was just dedicated to buying or joining this crypto platform or buying cryptocurrency, this, that, or the other thing? And it seemed like, man, I'm a big fan of this stuff.
Yeah.
And even I was going, this seems a little bit on the nose, right? And a lot of what we're seeing in the space from the big banks and VCs and investors trying to do the retail playbook, what they've been doing for the last couple decades and saying, oh, well, it's just it's the latest thing, and it just happens to be called cryptocurrency. We're going to run our same playbook. Yeah. And I think there's a lot of money being tied up into what I think is scam is too harsh of a word, but it's definitely inefficient capital allocation because it loses the philosophy of blockchain, which I think is a hindrance to the space, not a help to the space. Yeah. And so I would caution the audience to really step back and say, is this the old institutional playbook gussied and dressed up as blockchain and Bitcoin and crypto, or is this the real deal? Are you investing in something that's verifiable, trustless, permissionless, or are you just using a custodian and they are, own Bitcoin on your behalf or something like that? Right. And so a lot of the options out there today, unfortunately, most that are accessible by retail players like the little guys, really don't seem to be blockchain first, principally. They are return first. They are profit over people first. Yeah. Instead of aligning themselves with the philosophy of the future, which is rules for everyone. We all play by the same rules.
Well, and that was going to be kind of my next point is this, profit over people. I mean, we're seeing that right now inside of just even. Let's talk about the trading platforms.
Mm-hmm.
Right. I mean, what you're seeing happen on these trading platforms versus to say you want to buy a particular asset, a particular digital asset, and there are ways you could go buy this and get the real price, and yet these things are popping up all over the place to put more money in their pocket. And
it's getting better and better every day, but we've had historical problems, and the problems still persist today, where the platforms that retailers are marketed to go buy their crypto on are really giving retail users very poor execution. What does that mean? It means that the price that you think you're getting or the price that they advertise to you may be far worse than the going market price if you know where to go get the best price. And so that begs the question, where do I go get the best price? often it's not on these centralized exchanges or these broker platforms. There's this whole wide world of decentralized finance, which pops up in headlines every now and then, increasingly more these days. It's abbreviated as DeFi. And decentralized finance is opening doors to where, and I keep bringing it up, where we're all playing by the same rules.
Yeah.
Where my trades are side by side with guys that are 100 times my size and 100 times smaller than my size. And everyone is getting the very best execution possible because it's happening directly on chain, right? Yep. And so that's just one example about how the blockchain is disintermediating the existing institutions, cutting out price gouging from the little guy, and creating a future that is more equitable and more fair for everyone, right?
So this is something, you just made this comment, and I just put this together. I mean, this is the challenge, right? So I want you to talk more about decentralized finance in the way of the fact that, I mean, the idea of decentralized finance is putting tools in your hand that the centralized finance groups, the traditional finance groups, have had all along.
Right.
They've been using those tools to create products, packaging products to hand to you. But what's happening today, and this is where the noise in the news kind of gets a little bit confusing, is you can't have DeFi or decentralized finance inside of traditional finance, but they're trying.
Yes.
They're trying to take all this decentralized finance and put it into what's happening
while sitting in the middle and taking their fees, right? And so I like the way you've presented that, which is centralized finance or traditional finance is selling you products, as opposed to decentralized finance. I like the way you put it, gives you tools, right? And so let's talk about that. Like, what are the tools that you're given? I think it's in two main categories. You have the ability to exchange, and you have the ability to collateralize, right? Which is boil that down to those two verbs, and you have the traditional finance playbook, which is they're in the background trading and exchanging. They're in the background collateralizing, right? But if we put those tools into the hands of everyday users, they can all of a sudden, structure their own products to come up with very interesting investment vehicles that have far superior returns to what they could get in the traditional finance space. And so, to build on that more, man, I mean, you're talking about today a system which has over $100 billion of total value locked in decentralized finance today.
Say that again, how much?
$100 billion.
$100 billion.
Where, that was near non-existent just a few years ago. Yeah. And so that opportunity today is creating yield that's above market that we'd seen for years in traditional finance, where, if we compare and contrast the quote-unquote savings rate in traditional finance of, geez, what's your savings rate at your local bank? Like 0.05%?
Yeah, something like that. I think it's above 1%.
Yeah, it's definitely sub 1%, and it's it shouldn't be even worth your time. Right? What's a money market these days? Like maybe above 2%?
No. I think it's like 0.4, 0.5.
Yeah, who knows? But the reason it doesn't even matter to me is because I know in decentralized finance, what I get on my own money is multiples of that. And I think that opportunity alone makes this worth investigating.
Sure.
Right? And so the deeper we've gone into this together, we've found more and more, wow, like, when this secret gets out, it's going to get out in a big way. Yeah. And the power that this gives everyday people, it's very hard to overestimate it, is in my point of view.
Well, I mean, what you're talking about at the end of the day is, whose asset productivity are we really talking about?
That's right.
Using decentralized finance creates the opportunity. When you put money on deposit at the bank, no matter what they're paying you a little bit, they're making a ton of money on that.
That's right.
And they're moving it around and they're doing it. But what about you? What if you could be the person who steps into that and participates in that? And so it's your asset productivity. You're putting your assets to work.
Right, and so that's right. So you put in at 0.05%, they're writing mortgages at 3%, whatever it is. And so everything in the middle, they get to take. And so why has this existed historically? Well, if we went back, 70 years, it would be very difficult for me to amass enough capital together to go write a group of mortgages, right? And so the need for an intermediary existed because they provided the valuable service of connecting idle capital, and they'll give you something and they'll go write mortgages. Okay, that's good, but do we need it today?
Yeah.
We don't. So technology exists today where we can disintermediate the banks to where, hey, your services are no longer required. You and I can be in the business of writing loans to whoever wants to be on the other side permissionlessly, and instead of there being such a wide berth between the yield a depositor gets and the interest rate a lender or a borrower would pay, why can't that all go seamlessly against each other? And so cutting out that middleman, and banks have all that infrastructure they have to pay, all the salaries they have to pay, all the regulation that they have to, the armies of lawyers they have to have, the lobbyists they have to pay for, that costs money, and that's where that spread is going. Let's eliminate all of it, right? We have technology today. The blockchain enables the systems to be more permissionless, trustless, verifiable, all the good things we want that would protect us that the banks used to do, but we were paying way too much for.
So the idea, in short, right, is blockchain is the way that we become the bank.
That's a good way of putting it, right? So decentralized finance is really about being your own bank. Right? Rolling your own lending, rolling your own collateralization, doing your own exchanges, like taking control of your financial situation in a way that is heretofore totally unrealized by the little guy.
So that sound, like in one sense, you're like, that sounds fantastic. Sure. It's not simple.
Not yet.
Not yet. No, but that's what I'm saying. It's not simple right now. So for someone who's watching, like, what's noise, what's news? I want to walk through a little bit, at least talk about thousands of coins, right? So I could pull up the most popular app right now and look that up. And I'm thinking, okay, so I want to get in on this game. What do I buy? I don't even know where to start.
Right.
We've got global icons tweeting about their favorite, opinions on this. But one of the things that was most interesting to me, and I don't think we've got a problem, I don't really have a problem saying this in this video, but it was like, what's going on? And at the end of the day, if we look at pets.com and we look at everything, eventually we probably do get some sort of crash that cuts out the noise.
Oh yeah, for sure.
And it really looks like there's going to be two standing when it's all said and done.
So let me take it from there, which is you're talking about, it doesn't take a rocket scientist to see that the last 18 months in the digital asset space has been fueled by mass speculation.
Absolutely.
Right? And so now we've seen the spawning of thousands of coins, right? All these NFTs. And so what's really noise and what's really news? Well, let me tell you, Eric, I'll say it. Like, I think 99% of everything out there right now is a scam. I do. They're not going to survive. They're fly-by-night. There's no real plan. It's totally speculative. So what do we do with that information? Okay, well, that's the $1 million question, or maybe it's the 10 Bitcoin question, whatever it is. And so I think we're going to have, maybe you want to call it an extinction level event for the space, and we're going to really see who survives. And that's very exciting to me, even though it's not exciting to think about monetary losses for lots of individuals out there. It's exciting to clean out the chaff and actually start building a strong infrastructure with strong foundations to where on this next cycle, now that we've gotten a level of maturity and a level of technological development to where these tools that we talked about earlier are really starting to get developed, wow, the future, once a lot of this speculation is cleaned out and once the charlatans are gone, once your favorite Twitter personality stops tweeting about some sort of dog coin, right, that we can really see where this space is going. And so, look, like, speculation's always going to exist in every market. It is. It's hard to say that we're not heated now, but the fundamental value of what I believe to be increasingly growing every single day of this space is going to eventually surmount the speculative bubble, even if we are in a little bit of a bear market, and we're going to have some great opportunities on the horizon to take advantage of that growing space.
Well, and this is where Harrison and I really were it was in the course of these coffees, we're having these conversations. I said, there's a business opportunity here.
Sure.
There's an opportunity for us to take advantage of this together. And so part of that really was on this idea. Again, for those of you who lived through 99 and not the 90s and 2000s, without the 90s and the 2000s clearing out, maybe Netflix isn't what it is today. It was a beautiful clearinghouse of getting rid of all the noise and finding out who was really going to thrive, and then sitting on the other side of that and saying, okay, where's the real opportunity? Where's the real evolution of this taking place? And so it's where we sit today, with an understanding of we're in an environment that may be a bit speculative, that there's opportunities inside of that The greatest opportunity we found today is around this idea of being your own bank.
Right.
And there's enough opportunities that exist for people to increase yields,
Yes.
to take advantage of what's happening inside of that space, and to be able to, this is where we start. This is the AOL version, with the knowledge that as this gets cleaned out, as other things come along, we find other opportunities.
Yeah, so let me help you say it another way, which is my current strategy and the strategy that we're kind of developing together understands that we are in a speculative bubble, right? And so the right thing to do is definitely not let's go buy every single dog coin that we can find, right? Because we're probably going to lose a bunch of money.
Yeah.
Not to mention we have to stomach a ton of volatility that is just not fun to do. So why not instead pick the assets with a track record of growth, a track record of winning, buttress that with healthy cash reserves, right? And find a way to deploy those assets in such a way it generates passive yield on those assets themselves, instead of just saying, okay, let's go buy Apple stock and hope the Apple stock price rises, that way we make money. Right. It's kind of similar, let's go buy Apple stock, which is a great company, right? And then we're going to deploy that asset in such a way that we get more and more percentage points of yield. Right? And so there are ways to structure a digital asset portfolio that minimizes that volatility while still generating what is, in my opinion, above market return for the level of risk you'd be taking. And so that's the strategy you and I are formulating. And I think, so far we've seen that it's working pretty well.
We have. So let's kind of tell you where we are right now. So we've been in thesis mode. We've been in a place of just talking about this. What we are looking at launching here late first quarter, early second quarter is the Halcyon Digital Asset Fund, which Harrison is leading as the Chief Investment Officer and head of that. And then we're 50% partners, 50-50 partners in this business. And looking at where the opportunities are. Now, let's be really clear who this is for and who this isn't, right? This is for the accredited investors. Right. This is not your everyday investment. You're going to want to know information. This conversation here is not enough for you to say, hey, I want in. No. The other thing, too, is this is speculative capital. This is not your kid's college fund.
Please don't.
This is not even the money that you're taking on vacation in 4 years. This is money that you understand there's an opportunity to be speculative with. We think there's a big opportunity that's out there. The other thing, as we've structured this, and we can get into more details, is we've aligned profit and people in a way that we don't make any money on the fund until our clients are making significant returns that they can be comfortable and happy with, we can be comfortable and happy with. But let's, before we kind of wrap this up, I think we do need to at least, we didn't say this, but the other thing is, this is not just a thesis, this is a way of life for you. Oh yeah,
so I am... So a lot of people cringe when I tell them this, but more than 100% of my net worth personally is in cryptocurrencies. So like I have a credit card bill every month and I have a car note, right? And so then I have to balance that with keeping some petty cash in a bank account, but everything else that's not that, it's in crypto. And so if I wake up and live that life every day, and it's been, like you said, a way of life where I have basically become my own bank. And if anyone wants to know more about that process, more about the security side of what we have to do, more about the custody side of what we have to do, and more about the yield side of what we do with our everyday capital, that's a conversation I'd love to have. But again, to repeat your point, don't do what I'm doing, right? I think I have a little bit more knowledge of the space than most people do. I have some background, but I hear some horror stories about people taking out mortgages on their house for Bitcoin. That's not what we're here to advocate for. We're here to advocate for responsible exposure to this exciting space, and I think we have we're building a very interesting product that I think a lot of your audience might find very interesting.
No, I think so. And so what I would encourage you, a couple of things I guess I would say is, first, if this is something you're like, hey, I just want to do this on my own, that's great. Be careful, because what we are seeing, and I think what we'd repeat, is a lot of what is coming out in the retail space is just lipstick on a pig. It's a repackaging of the things that have been broken about the financial system all along. and trying to slam cryptocurrency into it.
Not to mention, there's a little bit of regulatory gray area with a lot of these centralized guys. I mean, we've seen the lawsuits just, in the last week or two, the SEC hitting some people with some pretty hefty fines. And so that's one of the reasons we have to do this the way we're doing this, which is structuring this as a traditional hedge fund that's SEC registered, the whole thing. We have the rules we have to follow, and the reason we're doing that is because the wrong way to do it, as we see, comes with some consequences.
Absolutely. Absolutely. The other thing, too, that I would tell you is, if you're still like, I don't understand this and I don't know what to do, is pay attention. Because, there's been some people who've said this is Internet 2.0. I think this is bigger than that. I think this is bigger than that because I think it's far more reaching than even what we've seen in the Internet. But at the same time, going slow and knowing what you're getting into and why you're getting into it is super important. Yes. Taking your time and being completely educated. But I've got to say this again. This is only for accredited investors. This is not at the point. This is for the retail public and everyone who's in general. But I hope that today's session just gave you a little bit of a glimpse into what's going on in the space. Is there anything you didn't get a chance to say, Harrison, before we wrap things up?
I guess let me reiterate that it's hard for me to get too excited about the technological innovation that is blockchain. And when we think about what the Netflix of blockchain is going to be, I think it's going to have far-reaching consequences that we just have no idea. And so again, Eric, thanks for having me on. I'm excited to talk to the audience down the road about this more. Good luck.